Hi, everyone. Welcome to the Buffett and Beyond Saturday Stock Market Recap, March 28th, 2026. And yeah, the first quarter is almost over, folks. And remember, if you want to live on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And, well, this week, the market tried to hold the 200-day moving average, but just couldn't close above it. And this put a scare in the traders who sold pretty heavy on Thursday and Friday. In our weekly stock analysis video, Dell Technology is up 34%. Right here, 34% year to date. This company has a backlog of orders, which is causing a lot of people to buy into this stock. Remember, 20 years ago or so, this stock was in everybody's portfolio. And our ETF video, the dividend growth and income portfolio is still positive, while the S&P is down 7% year to date, and the NASDAQ 100 is down more than 8%. And our top housing stocks are down just 1%, while the housing ETF is down almost as much as the S&P 500. So it goes to show that most of the time, you pick the top stocks in any ETF or index, and you're going to outperform most of the time that ETF or that index. So let's take a look at the market, folks. And here we are. These are the Bollinger Bands or the volatility bands, these blue lines in here. This center line is the 20-day moving average. And you can see that we went below that bottom band and then tried to rally above, and we'll show on the next chart where this level is right here. And then it just couldn't do it. In fact, this day, you can see over to the right is where the market closed. It closed below the opening of the day, and therefore that put a scare into the market participants on Thursday, and then again on Friday. It gapped down Friday morning and closed below that band once again. The only positive thing here is that the volume was not as heavy as it has been previously, but still there. The market is just in a downtrend right now. And let's look some indicators. This is the same chart again. This is the S&P 500, and this red line is the 200-day moving average. And you can see on Tuesday it went above it but closed below it. That's what these little lines are. This is the day's travel, and this is where it closed, and on the left side, it's where it opened. So it actually closed above where it opened, but it couldn't hold above that 200-day moving average. The next day, the market fell, but it actually closed a little above where it opened. So that was positive, and it gave the market another try to get through that 200-day moving average, and folks, it just couldn't do it. And again, it closed lower than it opened. And then Thursday and Friday were just nasty down days. And you can see that the indicators, the top one up here and this bottom one down here, are still very, very negative. And let's look at the QQQs, and we're seeing the same type of thing. And here's that 200-day moving average again. And we want to show you that back here, this green line is the 20-day moving average. The blue line is a 50-day moving average. And when we had that crossover to the downside, that was our first indication that the market could be in trouble here. And then the market actually kind of went flat for a while, almost a whole month in here. Just kind of did nothing, and then all of a sudden started breaking to the downside with all the oil problems. And even though 6 or 10 oil tankers did get through the Straits of Hormuz, that it didn't help the market at all, because now interest rates are going up, and when interest rates go up, housing slows down. You're looking at paying $1 more for gas at the pump than you were a couple of weeks ago. That slows everything down. And so people just looked out there and said, oh, everything is just pretty ugly. But those tankers going through the straits and getting oil out to the world hopefully is going to put a lid on the oil. So it depends what happens in those talks between Iran and the U.S. And, of course, they're using an intermediary there, so they're not meeting face-to-face as far as we know. So that's going to go on. for a while, and if that's true, then the market's going to make a stand in here someplace. We just don't know where it's going to be. And when we look at the protection, we can see that the SPYs, which is 1/10 of the S&P 500, getting close to the puts. And remember, we don't have the March puts anymore. We just have the April and the May. And we're getting close to those levels right now. And with the QQQs, same thing. We're getting close to those levels. But we do have that protection in there. Again, the March put expired last week. We looked for a chance to buy because it was quite expensive. And there was, we just weren't able to do it. But we still have about 2/3 of our portfolio protected in here. So we're sitting good if you have these portfolio put protections in place. And if not, the market's not going to go down forever. It never does. And they'll straighten out this oil problem, and we'll go from there. So, folks, we didn't have a good week. We didn't have a good month. We didn't have a good first quarter. So this is the weekend. Go out, clear your head, forget about the market because it'll be open again on Monday. So you take the weekend, be with your family, be with your loved ones, forget about your portfolio because you're in all good stocks, and all good stocks eventually come back. So don't worry about that. Be with your family, have Sunday dinner. Most of all, be safe, and folks, we'll see you back here in a couple of days.